the 40th episode of the weekly trading wrap-up, where we talk about the weekend markets from a trader's perspective, what to focus on and what to ignore. So let's begin. As usual, we're looking at a chart of the S&P 500 for the week of Monday the 18th of August till the 22nd. What a crazy week, okay? Let's get started. Okay, this arrow here denotes Monday, Tuesday, Wednesday, Thursday, and then the Jackson Hole Powell put came in. Okay, PACO. I call Powell right now PACO Powell, because he caved. He actually talked bearish. He talked very dovish in Jackson Hole. We'll get to that. But as usual, first we talk about the technical picture, just the technicals on the market. So, same as always. For the past couple of weeks, we had these 2 weeks like a stairway to heaven, low volatility stairway to heaven. We're almost at highs again, so this is a very bullish chart with very little drawdowns, okay? Last week, we noted that it's very bullish as well, but we noted that a little snag was this technical picture of the RSI, like as the market was going up, like you see it going up here, the RSI from the previous peak was going down. So that was a signal of a potential slowdown in the upward momentum. And in fact, that materialized early on in the week, like Monday, Tuesday, Wednesday, Thursday were very low vol down days. Which was starting to sell the market off and realizing the negative divergence on the charts. However, on Friday that changed with Powell started talking very dovish and put a huge bid under the market. Okay, so because of that very special day, okay, it's a very special day because I've never seen Powell or the Fed at all cut markets near all-time highs, okay? And he used every excuse in the book to do it, the labor market, etc. Okay? But you can't deny it. The technical picture is still bullish, and we're sticking with our net long position, okay? Even though I do have some short exposure, okay, the short exposure is entered into in a way that is not going to be very damaging if the market continues to go up. So should always have short exposure. There are some weak stocks. I see some stocks down today, especially the energy drinks like Celsius and Monster energy drink. They're down today, okay, even though they're at highs. You should still be looking for shorts and to protect yourself in case market goes down. However, let's conclude with our technical picture. And the technical picture here is bullish, okay? I'm going to get rid of this arrow. I don't like it. Just so you know, this was the week that we're talking about. Okay? Basically like a flat, we slightly up thanks to Friday's stick safe, okay? So after the technical picture, we go to the macro, okay? There wasn't a lot of macro that we look at. However, it is significant. The first thing that we found in the macro was building permits. Okay, and building permits, always a leading indicator, came in at 1.35 thousand. 1.35K thousand. Okay, it's 1.35 million. So the building permits are going down. If you look at the 10-year average, it's still high at 1.35, but it gets really bad when it gets to the single digits. The 500, 600K, but there's 1.32K. So the trend is down. So building permits going down suggests that housing going forward is going to be weak. Okay, now after what Powell said now, that the rates are going to go down, will that pick up? I don't know, but so far we see weakness in housing starting to develop. This takes time. It always every weeks and months to develop. It could take 2-3 weeks or months or 6 months for it to continue to go down and crash. Okay, but for now on, the trend since February is down on building permits, and this is a leading indicator, so you have to make a mental note of that. The second thing in the macro front that came up were the initial claims that we always look at on Thursday, and they were shot up at 235,000. Okay, so that's much higher than it was before, 224. However, still 224,000. So it's much higher. It's going up. It's just like the building permits. It's starting to go up, or building permits down, but it's starting to make a move in the direction that we don't want it to go to. However, you say it takes time, and it could be one of these moves where it goes up and then goes down again. So nothing to worry about, but note that we're beginning to get to the point where it might start to become a problem. But again, that will take months. Okay, as of right now, given this picture, we are bullish. Okay, we are, and because of what Powell said, which I will get into later, okay, I have changed my view on things going forward. Okay, so we're in a bullish technical pattern. Building permits are still okay, holding up but going down. Mental note. Initial claims still in a good range, but going up. Okay, so we have to make a mental note on the macro. It's still very early, but a mental note on the macro that it's not going our way for now. Okay, so now this is the part where we talk about what I found interesting. So I'm going to take the whole session to talk about the Jackson Hole meeting, because this is all about Jackson Hole fallout. Okay, and this is what happened. The market gained 1.5% on Powell sounding very, very dovish for Jackson Hole. Okay, so what is the effect? What have I changed? What is going on, and what will benefit based on this Jackson Hole pivot? Okay, for me, the first thing that we look at is the bullish nature of the market. However, what we forgot to look at before was the sentiment analysis. Okay, so the sentiment analysis we should have looked at is greed at this point for the fear and greed index CNN, the CNN fear and greed index. Okay, it was close to neutral and greed as during the beginning of the week we were going down. So at this point, it was hitting neutral to greed. So it was getting hit. Okay, the negative divergence on the charts was playing out. Okay, that made the fear and greed index go into a neutral border town between neutral and greed territory. And now after this market, it's only up to 61, which is barely into greed. It can go to extreme greed. We have more to go. Okay. And the other shocking thing that continues to be shocking is that the AAII investor sentiment came in at 45% bearish and just barely bullish, 30% bullish. It's below the averages. And as we mentioned for the past 2 weeks and 3 weeks now, is that this bearish sentiment is going to keep a bid under this market. That's why I am still bullish this market. Okay, so this is going to add future fuel to the market because we're still not even close to being bullish or extreme bullish. Same with this. We're just barely in greed. Okay, this can go to greed and then back down to neutral, back to greed, back to neutral, as this market stair steps its way up. So this brings it down to neutral. This brings it down to neutral. This brought it down to neutral. Okay, so it's still telling you that investors at the highs are very, very bearish, and that's what's going to fuel this move up. That's why I'm bullish. Okay, but right now I'm going to change my view into going from bullish to a melt-up mode. Okay, because of what Powell said, cutting rates at highs. This Jackson Hole scenario is now in melt-up mode. This market SPY could gain another 10%, 10, 15% over time. It's very possible, which means I'm just going to crush it here. We can get to the 700 level right here. Okay, we can get to the level of, I'll put a circle, 700. No, a little bit too much. Okay, let's just put it around here. So this level is very doable, 700 to 720, 730. It's very doable. Okay, so this level, 700, 730 is very, very, this target is very, very realistic given the melt-up, the possibility of a melt-up scenario. It won't be a straight line, but this is now in the crosshairs. Okay, this, especially if it's a rate cut cycle where it's not just one cut but multiple cuts going forward to save the very anemic jobs market. Okay, that's what he's saying. So what the implications are not just that the market could melt up for this Jackson Hole thing, but we have the beneficiaries, the bigger beneficiaries of cutting rates are small caps. okay? IWM specifically, and you saw IWM now getting ready to break this level of, okay, this is Friday, this is today, I'm shooting it on Friday. It's 235, almost 234.83. But it hit 235, let's say, okay? So this level is getting tested again. And we're getting ready to break it. If it breaks, look, it broke it once, it peaked its head above, the hopium was there, no, back down in 2021, 22. The hopium was there, breakdown. Because the rates were still staying higher for longer here, okay? But as you can see now, because let's see the US 10-year rate. The US 10-year rate went down, it's still high, okay? And that still could have a big effect if it doesn't go lower. But today's move, you saw the US 10-year rate fell down a lot, 1.7%, okay? Sorry. Still at highs, okay? IWM now, back to the small caps. The small caps should benefit a lot, and as you can see, they do on rate cut talks, because small caps are, you can see it. I'm going to put the cursor here, but look at this number here, the close, okay? It's at 3.92%. So almost 4% move on a day where the SPY went up 1.5%. Okay, right here, 1.5%. So that's why rocket fuel for small caps when rates are going to start a new cutting cycle. Okay, so that's if it happens. Okay, so how do we know rates are down? Well, let's look at the IWM, but we look at the FedWatch tool. Okay, for September, this was at 90%. It dropped to 75 as the SPY was dropping the whole week. People were scared that Powell will sound hawkish. Okay, so they were anticipating rates staying high for longer and Powell not doing anything because inflation was still high, and market participants were worried that Powell would target inflation over the jobs market. But we know that after his speech, he's actually targeting now the jobs market. So the FedWatch tool now back above 75%, because it was close to 75, right at the border. Because we know that when these expectations are at 75% or higher before the meeting, Powell almost always does what the market wants. He doesn't want to surprise anybody. Okay, so now it's 83. He's probably going to cut. Okay, and going forward, he's probably going to cut again. What about October? What do they think in October? There's a little bit of a slowdown there. They might. October, we don't know. But in December, it's still not 3 cuts. We're still at 2 cuts. So the market thinks September he cuts, October pause, and December he cuts again. Okay, before, remember, even this was much higher. This was like at 44, and this was at 43. This is 2 cuts, this is 3 cuts. So 3 cuts were edging the 2 cuts for the year. Now we're still at 2 cuts even after Jackson Hole meeting. So this market wants to fly, wants to be bid, is looking at any excuse to fly, with sentiment still relatively low, not an extreme read, and AAII has a long way to go to get to extreme bullishness. We need to see 4 weeks, a month of bullishness, like flip this, bullishness at 45%, 50%. And 4 months, that gets everybody in the game, because now people are still bearish. You need to get people really in the game before this bull market is in danger of collapsing, I would say. Okay, this is all things being equal. There's not, if another war or another COVID happens, all bets are off. But, that's a very small chance of happening. So IWM will benefit from this, and guess what else? My favorite, gold. Gold today went up. This is Friday. Gold didn't do that much for the week. It was still hovering pretty high as the market was going down, but the surprise is that gold is going to go up when you cut rates, because real rates will go down. Okay, so gold is starting to make a move. It didn't really go much higher. It just went up like $35, $33 for the day. It's not that much. I'm looking for gold to break up to new highs, maybe get to the 4,000 after this euphoric move. Okay, and because gold will go up, I think silver here will go up even more. Look at silver holding the highs as the market was going down and now ripping. 2% higher. I think silver now will outperform gold going forward. And if we look much further back on silver, like if we put out, say, a monthly chart, okay, see, silver, okay, this is $50, $50. I think silver could be heading to $50 again over time, okay? Over time, monthly chart, it'll hit 50 and then maybe break it even higher. We don't know. But I think it's going to go there given what's happening now in the market and in this Jackson Hole fallout period. Powell put, whatever you want to call it. Okay. So to me, silver, let's go back to a daily chart. This looks very, very constructive, very beautiful to me. Breakout and looking at highs. And the next level is 45. Okay. The next level is 45 and we're at 39 on silver. That's a big move. That's another over 10% move target. Okay, so I'm liking silver and gold, and of course GDX and the miners I think will outperform as well, because the miners now are up 1.5%. So let's not forget that the miners too have a long way to go. Like if you go to a monthly chart, not as much as silver, but they have a long way to go to get to the 66 level. It's at 60. It's just 10%. I shouldn't say a long way to go. But the miners, GDX, could go to all-time highs. The target my target is still there. So they can get higher than the 2011 Halcyon highs, right? That'll be something special. That'll be everybody jumping on board. And the juniors, the GDXJ, will skyrocket even higher. Look how much higher it has to go. The GDXJ, the Halcyon highs were 170. Okay, because the GDX is the big boys, the big gold miners. Okay, those will probably go, but a little bit more risky. The GDXJ, when people start jumping on here, there's much more potential. Go up another 100 points to get back to the Halcyon highs of 2011. Okay, I'm not saying it's going to happen. I'm just saying that there's more potential in the juniors right now than there are in the majors, although there's still potential in the majors. So before we quit this segment, let's go to the dollar. As usual, the dollar going down. This is Dixie. Dixie was holding up. Okay, it was holding up. The dollar was almost going to make a counter trend rally, but nope. Getting smoked. You can see that the currency was expecting, even before the Jackson Hole meeting, somebody knows, I don't know, but the currency was weakening even before the Jackson Hole, and it continues to weaken. So I think the dollar will continue to go down as this market goes up and as the Fed starts talking more dovish going forward, and they start the first rate cut. If they start doing that, then I don't like the dollar compared to anything else. So that's it for the Jackson Hole fallout and what I think is going to happen. Let's go to the daily chart, not the monthly chart. I think we're in melt-up mode. Sentiment is perfectly weak, still bearish, which is fuel for the next move up. And the segments that will benefit more are the small caps, gold and silver especially. So before we go, let's talk about the UUU trade I did last week, okay? So not even last week, it was on Monday. I took in the trade Monday. So let's make it more clear here. A down arrow, put it here, okay. As you can see, as the market went up on Monday, that's when I entered the UUU trade. And what I did was I brush here. I bought a call here at the $10 level, and I sold a call at the 15. That's my call spread, and I financed it by selling two puts at the $8 level, okay? Now, this guy here, let's get rid of this guy. Anyways, we'll get rid of him later. So This I put on this trade at a net credit, a small credit, okay? But as you can see, the very next day, the UUU dropped by 20%, 18%. It was 20, and then it recovered. Why did it do that? I have no idea. Nobody knows. This is no news. Okay, and the reason I did this trade because it was a proxy for the MP trade, because MP went down too, and MP is the rare earths play, and UUU just announced some good news on rare earths recently. So let's go back to the pointer. Yeah. So the news that it realized were that, where is it here? Let's put more events. Maybe we can see it here more clearly. Yes, it produces, I don't know how to pronounce this, dysprosium. Okay, it's a very heavy rare earth, and it was successful in its production of it. It's very expensive too. So that held a bit under it, okay, for the next day. But as you can see, the Powell put made it go even higher to new highs. Okay, so here, as it was, my position was getting tested, I was getting ready to mitigate the position, okay, by rolling forward these puts. Okay, there was machinations that I could do, and I would make a whole video on how I would have done it, but I waited because it wasn't at the right moment. Okay, basically by entering this structure in the way that I did, I gave myself the possibility, not the possibility, but I stacked the odds in my favor, and I gave myself many outs if I got tested. Theoretically, I could have like rolled it forward, and the stock could have fallen another 20%, and I still would have been okay, right? But then trouble would have started if it kept going more. So literally, I could have lost another. The stock could have dropped 40%, and I would have been okay. So I mean, it could happen. This stock can drop 50%. Okay, but it's very rare, and you stack the odds in your favor beforehand. So even though I entered it at the worst possible time, it came back and rebounded and bailed me out. Okay, so the odds played out in my favor. Okay, so if it didn't and it started going down, I would have rolled it forward, and I would have made a video on how I handled it, and it still would have been for a credit. However, as this market came back, I bought the 6 puts. I bought 2 6 puts here just in case, to cover my risk. I didn't have to, but it just cost me 10 cents. So this was a slight credit before, and now with this, I entered this trade at 0. It cost me nothing. Okay, so now it's a defined trade because I defined my loss. So here I entered at a slight credit, and here with this purchase of the put, it is at 0. So basically I have a free strategy, and it'll pay off if it gets to 15. It'll have a maximum payoff at 15 and higher. So that's what I plan to do. I plan to hold it up until it gets to this point. Okay? Maybe even, and if it happens before October, because it's with October puts, I'm going to get rid of it and reinitiate it again at a better risk-reward ratio. I'll take my profits and I'll re-enter it again. If it happens, we'll see. I'll have to see at that point whether I will re-enter it immediately or I will have to wait for a pullback. I generally like to wait for pullbacks. So given the fact that we entered this trade at the worst possible time and it played out in our favor, it just goes to show you that in the long term, the odds are in your favor, even though you could lose. When we entered it, there was literally a 20% chance of us losing, and it was almost going to be tested. Okay, and by mitigating it, we can knock that chance down to maybe a 10% chance of losing. Okay, so we got lucky that Powell was dovish, but even if we weren't lucky, the mitigation process would have begun, and we would have given more odds in our favor, given us a second chance, a second kick at the can to make this trade profitable again. So as it stands, it's back to being in the profit zone. So that's it for the UUU trade. Just a little recap of what happened. So to recap our position right now is that we are in a bullish market, melt up mode now. We could potentially get to 700 to 730, which is another 10-15% move, which is very realistic given what's happening. Sentiment is bearish enough which could add fuel to our bullish thesis. And some stocks or some areas of the stock market that you should be concentrating on are IWM, the small caps, because they perform better under this scenario. And I like gold and silver, the precious metals. Gold, especially if it breaks out here, this is a great consolidation. And silver. And even better consolidation, it consolidated while drifting higher. So those are my views for this week, ending on Friday the 22nd of August. And looking forward to next week. Talk to you later, guys.